thank you so much for joining our space in such a large number. I'll try to share one of my simplest Techno Funda screener for mainly for uh, short term oblique swing traders, right? So what you can do is to start with you try to buy companies which are having a PE less than 35, right? So first level of screening is the PE has to be less than 35 for that company. Then only you will try to trade that company. Then the PEG ratio has to be less than 3 times, and then the interest coverage ratio for that company has to be greater than 4 times. And the fourth parameter is strong hand scan. So when I say strong hand scan, when the promoter plus FIs plus DIs put together, if the holding is greater than 75%, then only you will try to have some kind of a trading position in that particular company. Then ROC has to be greater than 12.5% minimum, and then few technical parameters. So these are the 4-5 fundamental criteria, and then you will put few technical parameters, and the parameters are the stock has to trade above EMA 10, EMA 20, and EMA 63 and EMA 200. And the sequence for that moving averages are like the EMA 10 has to be greater than EMA 21, EMA 21 has to be greater than EMA 63, and EMA 63 has to be greater than EMA 200. When you are finding this kind of a setup with 4-5 fundamental screeners like Nifty, PE less than 35, chances are you'll have a relatively higher success ratio in these kind of stocks. And if that stock is in derivative, you can add a couple of filters over there. So what you can do is when the cost of carry is going up, when the cost of carry normally is having a diminishing nature. So during closer to the expiry, and on the expiry day, the cost of carry will go to zero, and the spot and future price will become the same. But for the starting of the month, that the cost of carry will be roughly ranging from 0.5% to 1%. So normally every day, by theoretically, it has to go down. But when the cost of carry is going up and the fundamental is also telling you to buy that particular stock, and technical is also perfectly in place, chances are you are getting a green signal from derivative side. Open interest is going up, cost of carry is going up, technically also the stock is good, and fundamentally also the stock is good. Chances are you will get a very high strike rate in these kind of setups. Normally we trade this setup with lots of effectiveness, right? And in these kind of setups, you can get a trades with a stop loss of 0.5% of the ATR value on daily charts, and the ATR you can take with a 14 days time frame. And here the RSI you can keep. RSI is important for the divergences and all. You can keep it for like 14 days. And if you're getting a decent support from derivatives and technical side and fundamental is good, chances are if you take that trade with a given stop loss, 0.5x of ATR value on daily charts, 75 to 80% kind of a strike rate can be easily achieved. But yeah, try to test this model with the 1, 2, 3, 4, 5 lots initially, and later on, if you are finding good traction with this particular setup, you can scale it